Good evening, everyone. I am C. Akshat Jain, moderator of this webinar. As an introduction, I am a chartered accountant by profession with over 7 years of experience in the field of audit and assurance. We are delighted to welcome you all in the webinar being organized by Continuing Professional Education Committee of ICAI. It is my pleasure to be a moderator for the 66th webinar on role of analytics in forensics and Ind AS 115. In a short while, we'll start this webinar. First of all, I'd like to apprise you about CPE committee. In today's ever changing professional scenario worldwide, the biggest challenge the professionals face is how to stay on the top of their game while adapting to new requirements and norms. Therefore, it is imperative to aim it is to be up to date to offer unique guidance, influence others within their innovative approach and expertise. It is also vital to stretch old ideas beyond traditional boundaries to create new perspectives. In this context, continuing professional education facilities professionals to maintain, improve, and broaden their knowledge, skills, and expertise required to achieve their professional goals through webinars, seminars, etc. As a part of this program for this evening, we have two sessions, so 1 hour each. First one will be on role of analytics and forensics, and the second one will be followed by Ind AS 115. Our speakers will talk about the above these two emerging areas of professional interest. So, first of all, I'd like to introduce CA Kapil Dev Soni, who will be facilitating our first session on the role of analytics in forensics. CA Kapil Dev Soni has over 20 years of experience in internal audit, controls, compliance, forensics, and finance. He is known for driving value through advanced analytics, process optimization, and risk management. He has worked across diverse industries and geographies, leading initiatives in audit analytics, SOX assessments, SAP, HANA, or ECC reviews, IT governance, and business process transformation. He is a strong believer in the power of technology and collaboration, and he brings a forward looking leadership approach focused on innovation, people centric growth, and sustainable results. So, now I'd like to invite him and take it forward with our first session. Thank you.
Thanks for setting up the context. Good evening, everyone. I would try to leverage my experience today on forensics world and how the analytics really help in terms of achieving those forensic cases, how to prevent fraud and how to do the deterrence of the fraud. So let me share my screen to take you through. Just a second. Is my screen visible? Akshat, can you confirm?
Yeah, it's visible now.
Great. Yeah, as the topic is role of analytics in forensics. So in today's world, we are sitting where every data speaks, every spreadsheet confess something, and every fraudster, how smart be he or she is, leaves some digital fingerprints left behind, whatever activities we do. And in this scenario, it is very important how are we shaping up the entire thing, because in today's environment, whatever we do, be it posting any transactions, be it liking any social media platform, be it doing any GRN, invoice posting, or whatever transactions we do, we keep a kind of mark of the data there, which is left over, and the trail is left over. And in this today's world, the even fraudsters are becoming more innovative and more doing research in terms of identifying the avenues where the fraud can happen. So that's where the entire topic is, and which is the dark side of data. So I welcome everyone to this area where a lot of things happen and a lot of counter models we need to prepare to safeguard organization, to safeguard us from the fraudsters. Now let's accept the fact that what we are witnessing in today's world, and why we are talking about analytics in forensics today. We need to understand how the transactions are changed the way it used to operate a decade ago. The transactions are now multi-million transactions. It has gone 10x from what it used to be. Fraudsters are now more tech savvy than the IT team or the IT auditors. We are the way of doing the business, the way of operating the business is significantly changed. Every organization using multiple applications, ERPs, or which could be cloud based, which could be on prem, which could be subscription based, or which could be any data point. So we have created the complexity the way operations happen, because at the end we want end users to be at convenient, but it looks very simple from the outside, but from inside it all gets complicated. And of course, when all these things are there, the fraud triangle, which we all know from forensic point of view, remains there. Now, when the fraud triangle is there, opportunity is there, potential is there, because the system is complicated, transactions are humongous, and we don't have technology-based understanding how to combat that. In all those theory, we keep believing that we may have some hunch that fraud may be happening, suspicious activities are going on, but regulators don't believe in that. They need data-backed evidence. They need strong digital fingerprints. What went wrong? They don't believe in narratives in the story. And manual audit is, as we all know, is impossible to manage the current environment. We need to really build up something which is like metal detector, identifying even the tiniest needle from the kind of heap of straw where it has gone. So in this scenario, how are we competitive to ensure the fraud is identified, and how we are you're getting the edge that even the fraud is about to happen, we are countering it. Right now, it's a situation where people like us who are following the role of chief audit executive, controls head, and we are in a situation where we have been asked to do the audit. And as I said, the company size, the company number of employees, it used to be huge. It is currently also huge. The example what I am giving, but the important differentiating factor is the way we operate the business, the way we do the strategies, the way people who are part of the organization drive things innovatively. And that's where the dilemma comes, that today the data is humongous, and the expectation, the ask is, I have to do a comprehensive risk assurance when everything is vulnerable, because we are heavily dependent upon technology. The transactions are technology driven. How are we ensuring to know that these things are taken care completely? Because we all know that fraud is something which is hidden somewhere, and that's the reason why leakages are happening. But how are you going to extract it? So fraud is not rare, because fraud was there, fraud is now also, but now in this humongous data, it is hidden somewhere, which is difficult to counter about it. Yeah. And now in the situation, being a CAE or controls head, the question comes, do I follow randomness? Do I follow sampling technique? Do I follow something which is my gut feeling? The answer would be no, because the expectation is to scan every transaction. And that's where the role is very, very important, how we take this up. Now, the fraud problem is 1 in 5 companies suffer a major fraud every year. That's a statistics we talk about, and there is a release every year from ACFE as well, which gives a comprehensive coverage on the fraud pattern, fraud profile, and the area. But I've just taken the glimpse of it, that mostly frauds are repeat frauds. The patterns are repeated. 80% of fraud having some sort of digital fingerprints. Most fraud happens within the organization, because no third party can commit a fraud until or unless there is some insider information or collusion. Yes, they can do it definitely by having high-end technology and breaking the firewall, breaking the cybersecurity control, but not everything is so easy if organization is following the right set of controls on that part. But mostly the study talks about the fraud happens when somebody is also colluded, and traditional audit catches the fraud after the loss happened, whereas the expectation is that we should have something which is giving us an early warning trigger or real time alert, and that's where the entire focus and emphasis is. Now, if we talk about what exactly, why analytics is very much important in the forensics. Because traditional audit detect less than 10% of the fraud. It's very difficult. Every time you can't rely on the whistleblower, every time you can't rely on the information which is passed on by the sincere employee to the management, or you get some sort of hint of that, what's going wrong. Now, when we go by data driven capabilities, then you understand the pattern, the visuals, the behavior, and you keep training them to understand how it's going on. And then when you build up these models, you understand what are the scenarios. Are these scenarios captured well in advance? Is these scenarios getting repeated? The moment it starts somewhere, we have some sort of hint, some sort of alert which stops doing it. Now, let's understand the classical fraudster behavior. We often hear that and this is our experience when we do the investigation and we understand this is how the case is substantiated. The things come up that transaction happened midnight, or transactions happen and after that the logs were deleted. Or if we identify somebody to whom we say this vendor is associated to you, the person says, maybe my cousin or my friend, I was not aware, everything I can't understand and I can't remember. I don't know the code of conduct policy. I didn't submit the document. I didn't give the declaration, or I took a loan amount, small amount, which has to be repaid. All those things comes up. But as a forensic examiner or as an internal auditor professional, how are we connecting the dots? And that's where the fraudster profile, we have to keep in mind and build up in the system that activities which get spiked at the month end or period end, because that's where the urgency gets created. And as we know that urgency kills the governance. So when urgency gets created, month end, period end, quarter end, and in the span of thousands of transactions, few transactions which has some fraud element also gets through, and nobody noticed that because the situation is created that vendor is threatening to stop doing the work if we don't make the payment, and hence payment has to be done. We often go by the trial balance review or financial statement review, but we sometimes unnotice the accounting entries which get posted, reversed again and again to give a kind of eyewash to the auditor. We sometimes experience that the vendor master gets created and it get approved within hours, or sometimes even the payment also done by creating a PO as an advance payment. Or sometimes we see that entire cycle of the PR, PO, GR, and invoice is done in a very quick period of time. So, in a sense, when we experience these all fraud examination outcome, we connect all these things comes as a kind of root cause or a modus operandi. Now, are we using this modus operandi or root cause in terms of our data layering to ensure that the moment these things are happening, we are alert to get kind of alert on that part to take right action before it becomes a thing. Now, when we talk about fraud detection in action, so we have witnessed or we have experienced those scenarios which I talked about till now in the previous slides. But how the question is how I am going to use this today in the world of AI ML models. Everything is going in a very, very different way of doing it. Even business perform transactions using AI ML concept to predict the business and to perform their planning and to perform their actions around it. Now, being an auditor or being a forensic examiner, are we equipped to counter that or not? Are we capable to identify unusual pattern on that? An unusual pattern can be on any business transactions. Let's say example of raw material usage or example of procurement part. Now, everything is not governed through BOM, bill of material, or even if it is covered through bill of material, at the plant level, at the site level, there are a lot of ifs and buts, a lot of excuses around it. And in the entire thousands of work orders, it sometimes get even unnoticed. So how are we ensuring that things are right or not? And who knows whether the bill of material is inappropriately not changed? Now, keeping all these elements into picture, how data analysis are covered to take care of these components, be it credit limit, be it sales, be it receivables, be it fraudulent customer or taking the discounts inappropriately. All those combination you get to know only when you use some statistical machine learning models or fraud detection models, because all those things in spreadsheet or the manual way of working of random samples may not give you the right picture or may not give you the complete picture out of it. And I'll take you through how these models comes in the coming slides. But important is to understand the business context here, how these elements are very, very important to connect the dots. Now, let's take a case study. This is a classic case study where some 2.9 crore fraud happened in a combination of few people. Now, if I just talk about how the modus operandi was followed, the price variation was there. For what fraudster did, it created the fake document as an external reference point that the market price is like this. It's let's say in the range of 120 to 130, and as a result, but in the actual reality, the market price might have been little lower. But now, some today in this era where we use ChatGPT, where we use multiple way of system, you can easily create the images, you can easily create the database link using this technology. Now, as a fraudster, if I have to set up or give a false imagination or false belief to the auditor that this is how I have justified the way of things, I can very well justify by creating certain documents. So this guy has done fake creation of documentation in terms of the price reference point, then blame the global price increase or urgent requirement. Because of that, I had to do the procurement at a higher price. And nobody questions, because on top of it, you have a SOD conflict as well. PR and PO, both steps are done by the same user. Even if it is not done by the same user, it is pretty much in the hand of a procurement person who actually perform all the negotiation, bid comparison, everything. How that has been done is a questionable thing always, until we see the real truth behind it and the underlying evidence is behind it. Now, this is one part where the price is manipulated. Second comes to the GRN part. Now, in the GRN part, if suppose a partial GRN is done and goods not delivered at all at the site location, PO system will not stop it, because system will say my PO is for 100 kg. I have received, let's say, 70 kg. It is well within the tolerance limit or well within the PO limit. The GRN is processed. Now, once GRN is processed, invoice is posted, because yes, you have received 70 kg material. That's a confirmation, and the invoice is also posted. Invoice is paid. Nobody is questioning. The failure happened here. Nobody has performed the physical verification part, or might have been performed but given a false report. Now, here the collusion also plays a vital role, and that's what had happened here as well. Then the invoices were inflated. The invoices which were coming of a certain price, 100,000, 110,000, in the month end, for certain invoices coming 180,000, 190,000, and as urgency created, nobody questioned, and accordingly the invoice got processed. Fourth combination happened. A selected vendor, it's a case of vendor cartelization. Every bid, one vendor is always a common vendor who is always bidding, and he's always getting selected, even though the market price going in a different direction or other vendors are also following that, but this vendor is always winning the bid because of certain reasons as a favoritism. And then the entire gambit is the fraud is happening, and the person who are involved getting kickbacks, they have a kind of rationalization. We are getting award because we are fast, we are making efficiency in the process, and hence it's an appreciation. As a token of appreciation we're getting, and it's just a rational of the fraud thing. Now, how to crack this entire thing? That's an important question, because we often experience that these things come up, or these things may be happening, may not be. We are not aware about how these things are happening and how are we substantiating it. And that's where the question comes: how are we building the models and doing it? Now, if we deploy fraud examiners here, they would understand that in the entire chunk of data from procurement pricing, only 3-4 items or 3-4 vendors coming out of thousands of vendors, which gives them suspicious activity that these prices are always consistently higher compared to other suppliers who are submitting the quotes. The GRN, out of thousands of GRN, few GRN pattern for particular user, for particular vendor, for particular material, where quantity never matches with the PO. It's always short, it's always early, and it is always in a situation where payment is partially done. And when these things happen, people notice that, okay, it's fine, the PO is short closed. We are not having a scenario where the GRN is higher than the PO quantity, and the matter gets sidelined because this is perceived as a low risk. But who knows that in actual the reality, we haven't received the service or material at all. And as I mentioned about the relative size factor, the third point which they have identified, the moment they see the spike of certain invoices all of a sudden, on certain activity all of a sudden, then it was realized that how these transactions particularly making a different outlier, and is giving a kind of situation where examination is required. Now, when we apply, or when in this given case, three different fraud examiners when look the data from three different models, three different angles, when it got clubbed together, the commonality started building up. Vendor is same, users are same, sites are same, materials are same, and it's giving a combination that yes, this is how the entire story is being built up to commit a fraud. But you cannot go just by that. You have to understand how these models are working and how are we substantiating it, which I'm taking in the next slides. Now, the question is, so in this given case, the examiners used three models. One is a relative size factor, one is local outlier factor, one is isolation forest. Now, what is isolation forest? How it works? So fraud is equal to rare behaviors. I mean, fraud, not everyone does the fraud. That's the real concept is fraud is being done by some fraudulent mindset people. Now, that rare behavior is something you can isolate from the entire tree. So just in a common parlance, what exactly isolation forest is? It's a model which works to identify the subset from one density of the transaction which is suspicious one. It's like when you're going into forest, you are breaking the forest into sub-component, that this becomes one set of tree, then again that you may have subset of tree, and then further subset of tree. So from that point of view, it keeps classifying the data on that part, and so that your suspicious activity is very, very sharpened to give you the those kind of outliers. And that's the model which is prominently being used in identifying the fraud pattern, because it gives unusual pattern within the set of classification data. And that's where we were able to identify that the situation always the GRN quantity is greater than PO quantity or less than PO quantity. Items delivered unusually fast versus historical norms. So it starts building up that way, that this site becomes my one tree. Under that site, this particular type of expense becomes another subset of tree, and so on and so forth. And within that, if it identifies that 90% transactions following X method or X lead time or X way of scenario, but these 10% transaction always goes in a very different way, maybe too early, maybe too late. So it doesn't differentiate the way that if it's too early, then only a fraud. It differentiates in both the way, extreme low, extreme high. And when we start looking from those angles, that this is not a normal behavior, this becomes an abnormal behavior. My delivery time is very less. My transactions are being performed only by the same set of users, and always these two vendors are involved. Then it says that this entire population is split into the micro level, and gives you the scenario that this is how you have to prepare. Now, how it actually works mathematically. So there are now isolation forest. This is something which is a complex statistical algorithm which you can build up in Excel. It's very difficult. You have to use Python or as a kind of language to build up these models, which makes you more free in terms of how these models are automatically running on the data every time the data is performing. But yes, it requires a little effort to build up that model in Excel, because you have to combine the statistical calculations to some extent, and then only it starts giving the results. But again, Excel can't handle the entire population of data, so you have to use some technology to get those outliers through the system itself. Then comes to relative size factor. It's little easy comparative to isolation forest in terms of functioning, but it is very impactful, because what it does, it takes the highest value of the transaction, park it separately for that particular vendor material combination or any such combination, and then take the average of the remaining transactions, and then compare the average of remaining transactions with the highest value transaction to see what is the size of the highest value transaction against the average. Higher the size, higher the problem. This you can very well easily do in Excel. It's not that complicated. But again, the large set of data you will get, you have to run it again and again to see the results. So system is always beneficial, but yes, it's not something which is very complicated, so you can use it. So when this RSF is being used, we get to know which vendor invoices are coming in a very surprise package, always having a RSF of 10 or more. The score of RSF 10 or more is really suspicious one, which needs to be looked into it. Then comes the local outlier factor. Again, it's little complicated, statistical based model. It identifies the density in the anomaly. So how statistics works? Some models works on the distance, some models works on the density. Density means the closeness of the transaction. So if you see in this example, there are 5 vendors, all are quoting the price between, so vendor 1 to vendor 4 quoting from 100 to 103, but vendor 5 and 148. What it does, it compares the price of one to another in all the permutation combination. And when it sees that one of the combination is way off, what is the way off combination on that? So that way it does the density analysis and performs on those data points. It is much sharper than z-score or quartile based method, because it gives it segregates the entire data from density point of view, and accordingly in the density, one of the transaction, if it's far from the density, it starts giving you the outliers on that part. So this is the local outlier factor. Now when we combine all these three, because local outlier factor exposes the abnormal behavior within the peer, because it sees the peer group, it creates a peer group, and within the peer group, if somebody is abnormal, it throws it out. Isolation forest is something which talks about the rarest of the things, maybe the process transaction, timestamp, manipulation, fabrication, what we have done. And RSF identifies the kind of creating an emergency and increasing the invoice by 2x 3x abnormally. So when we combine all these three models, it gives a kind of unique pattern that this is how the fraud is happening again. But it's a kind of indicative. No analytical will give you a final conclusion that this is how things have happened. You have to do a next level of activity. But yes, why analytical is very important, so that in the entire gambit of data, you understand what's going wrong, where suspicious things are happening. And this is not possible, or very difficult. I will not say not possible, very difficult to manage through a manual way of working, Excel way of working. It takes a lot of bandwidth in terms of looping the data from all the angles. Now, when we identify all those cases, the way it was identified by 3 examiner, that somewhere the price is manipulated, somewhere it seems to be GRN is partially done, somewhere it seems to be challenges on the higher value of invoices. When all these 3 combinations from the million transactions data zero down to, let's say, few hundreds of transactions, then the second level of discussion happens, or substantiation happen, where they understand some WhatsApp chat might be happening when they confronted people, that what kind of transactions are happening, are we really receiving the material or not, or somebody approving the GRN without having any material receipt, or somebody is just processing the control, giving the approvals without even looking at the transactions. And all those things are getting substantiated to conclude that fraud is established and something is concrete coming up. So in a very simple term, analyticals always give direction. It's a human investigation which gives confirmation always. But yes, it is important that are we getting the right direction or not. So I hope with this example, the use of 3 models, the importance of these 3 models, we got a kind of some sort of clue, because each model in itself is a subject of a couple of hours of study to understand how this actually model works. Another use case, the expensive vendor, which we talk about, and here we see that the price is fluctuating in the market, but one of the vendor remains constant. And the price ranges, let's say, as an example of 100 suppliers, the price ranges from 105 to 110, or 95 to 105. But some supplier ranging at 115 to 130, because those are of higher quality material. but one of the favorite vendors is always coming across without having any impact on the market fluctuation, and that vendor is always get selected. Now the question is how to get those understanding and analysis of that. Now here we use the Z-score model and what exactly it does. So Z-score, it works on the mean of the transactions and the standard deviations. And I hope as being a C, we understand very simple terms of mean, max, mode, and standard deviation. So it's very structured way, although it's not that easy as compared to relative size factor, but not as complicated as local outlier factor. It's in between that. So we just follow that what is the average coming up, what is my standard deviation, and if any transaction, when we compare the average and standard deviation, it gives a kind of score. So for example, in the given case, we had 148 as a highest value item. When we deducted the average out of it, and when we divided the result to the standard deviation, we got a Z-score of 4.3. This means, what does this mean? This means that my highest value transaction, when taken out from the mean and given a factor of standard deviation, the number, the result, if gets higher the result, higher is the concern in terms of the distance of the transaction. So Z-score talks about distance, local outlier factor talks about density. So distance, it says that the transaction is still going into higher distance. So any Z-score, if it is more than 3, is a concerning case. If Z-score is 1, the transaction set is pretty normal. If it is too unusual, but you can say it's a moderate risk. 3, very rare transaction may happen, so you can start looking at high. More than 3 is a critical one because it is next to impossible to have such scenario. So when we see those pattern in Z-score, when we built up our model in the data and we define these techniques there, so anything which gives me more than 3 or more is something I really need to look into it from fraud element angle point of view. Yeah, so this is all about the scenarios, the models, what we talked about, why this analytical models are very important to determine the fraud and combating the fraud in this today's scenario. So happy to take questions because it's pretty short presentation, because the important thing is how are we understanding it and using it. That's something is very, very important. So happy to take questions from audience who would like to understand more about it.
Yeah. So, hi, Kapil. So that was a great session on like role of analytics in forensics. And actually, in the today's world, as you said, that all the through audit we can get a knowledge of historical things which have already happened during the year. But to check and mitigate the things or areas or mitigate the risks which are ongoing and on a lifetime basis, that is important through these tools. So, can you give some examples of frauds or like areas which are like in today's world when AI is there and when there are so many automated tools being used in the industry? So, what are the major issues or areas which a forensic team shall look into while doing their role?
Yeah, so procurement and sales fraud has been prominent and is prominent. So what is changing today? The changing way of today is use of technology, but the concept of or the target subject of fraud remains the same. That ultimately the benefit is to get a fake payment. I mean, the payment is done without having any services or material. Fraudulent payment is done, or material has been dispatched to a customer who doesn't exist, so my material is lost, I'm not going to receive money, because that's the only motto of any fraudster. How the things have changed now, because today use of AI ML, you can create a lot of fake records, fake images, all those things are happening. We need to ensure that the documents what has been submitted, is it real or not. Today it's very difficult by manual process or human eye that the documents what has been submitted is really right or not. And that's where technology is required to use to understand how are we examining the pixels, the vector of those things, whether these things are fabricated or not, because the font may be different, the text could be different. All those things can happen when you start doing those manipulation and fabrication of things. So this is one area where fraudsters are exploiting it, because they believe that yes, we have now technology in hand, open source technology, we can create whatever images we want to create, bills, invoices, etc., etc., and which is very difficult to identify. Secondly, cyber security is an area where a lot of threat is there, because uh, you are clicking on which link, you are clicking on what, or you are downloading what applications, you are losing the entire data, confidential data from that part, and basis that you get email and you are asked to make the payment, or vendor database getting changed by employee. We shouldn't say that, but by employee who is actually having a fraud mindset in terms of changing the bank account, in terms of changing the critical masters around it. So yes, because of AIML, the ease of doing fraud is there. Though use of AIML from our side as a from audit point of view or forensic point of view, we are also having more weapon to counter them, but it's a kind of cat and dog situation every time it will remain. So this is how it is working.
Okay, great. So, and one more thing, like as you discussed detail regarding the procurement process and the supply process and how the things might go wrong, or due to maybe involvement of top management, and if they want to override over controls or maybe different process, they can do anything by way of fraudulent ways. So, what about what are the different type of frauds that can happen in a payroll process of a company, and how can we arrest them, or how can we detect them while doing our investigations or maybe our audits?
Right. So again, the ghost employee, the favorite thing. It was there, it is there, it will be there, kind of thing happen. Now, what happens? Most companies still on the remote working, or given a flexible hybrid solutions around it. That, and especially the Salesforce team who are on always field, and we always get a situation where we see that so many employees to whom the payments were made, they were not in existence, or they were not there, or they were already separated from the system. How are we controlling it? You may have systems, you may have logs, but someone really has to take action around it. So if my entire applications are integrated in terms of an employee is separated, all the exit activities are done or not, accesses are withdrawn or not, if that is not taken care, then you may have a situation, and of course with the collusion only, employee remain in the system, doesn't exist, payments are being made always at a month and salary are going on. Secondly, in terms of the technology what we are using and what fraudsters are also using, they may give you the false location tracking. The applications are there where they need to submit that which client they have visited, are they on the field or not. And you can fabricate everything, but how the technology is being used, that you are giving applications which is very much controlled, you cannot use it, you cannot take screenshots, you cannot take you cannot upload files and all those things by coming out of that boundary. You have to be in that boundary, so you set a geotagging, geofencing around it. So basis that you can counter it. But yes, the fraud remains. I mean, as I said, the concept remains the same, the way of doing it changed. So the problem in payroll is you are making the false payout. The time and expense report, the expense report what we are getting, employee has not visited Hyderabad location but claiming the meal of Hyderabad. I mean, this is how the expenses comes up. Or employee claiming hotel bills where there is no hotel bill but there is a laundry bill. So here you apply machine learning models, association rules to understand if my combinations are coming in the entire data set, why this employee claim always shoot it up or always outlier in terms of the average other claims. And if somebody has gone to hotel as claiming that he or she has stayed in hotel for 3-4 days, these are the common set of expenses bare minimum to happen. Now if I'm not having expense on the room tariff but I'm expense on the laundry, that means something is not right. So this is how you can catch those people, and these are the areas or avenues of fraud where fraud happens, but you can catch when you apply these kind of models onto that data.
Yeah, definitely. Like payroll is one kind of process which many times employees take advantage, and they kind of along with other team members, maybe with vendor team, they onboard their own known people so that the frauds and all can happen. So all those things.
Right, right.
Also, can you suggest some tools which can be used where we can actually upload our Excel files? Because as you know, from our clients or many companies, Data is maintained mostly in the Excel files, and so that we can, it's like, are there any tools in the market where we can just directly use those Excel file to identify the outliers, or as you said, Jad was there?
Yeah, so I mean, there are tools in the market which can be used. For example, for process mining, you have Celonis in the market, which can be used to load the data and you see the entire process mapping, how the happy paths get generated and how the unhappy path get generated. And there are a lot of customized tool as well in the market where you can load the file and you see the outliers coming out. I can share the link after this call for the benefit of everyone. But yes, tools are available, technologies are available in the market which can be used. And if not, then in-house can be built up using Python technology, because this all things are capable, only on those advanced level of language where you can use these models. So it can be done in-house. It can be used by any outsider tool as well.
Okay. And like, as we have been discussing different analytic tools, like there are so many analytical procedures that are being performed in audit as well as in forensic or whatever, wherever we are doing like investigation of these things. So how can we correlate the standards like which have been prescribed by ICI, like standard auditing and all, SFI 20 like is specifically on analytical procedures. So how can we link those standards with the actual implementation of our procedures in practical world?
Good question. So ultimately, the standards what we have prepared or what is issued by the ICI is based on the experience only. How on a different point of time we realize that this way of data analysis is also important from identifying the gaps or identifying the potential fraud into it. The simple answer is practically you have to have this review in terms of analyzing the data. And especially when we start doing the examination practically, we don't leave a single spot or single scenario that this could not be a situation where fraud can happen or anomalies can happen. So simple idea is that go with the unsupervised way of learning. I'm sorry, I'm more into technical or practical side of experience, because we have built up this thing, and in my experience we have seen that the situation can come up from any angle, right? And that's where, when we define the rule based thing, which is good that you have some base to start with, like my PO quantity is 100, my GR is 110, so you define a rule that if such scenario happens, there is a potential concern. If you see that POs are they are not used for 12 months, it's a concern for me. So I can put a rule based logic. So it's a combination. So you define rule based logic, which is the base of it, but at the same time, you have to adopt three more components to it, which is process mining, which I just mentioned. Celonis as a beautiful tool which gives you the process mining kind of thing, that how the process started, how the process ended, in what ways and means the process has been followed, how many paths I have created to perform the process. Higher the path, that means higher the problem is there. And that's how you get to know the inefficiency about it. Because every analysis, the objective is not only to find the fraud, because not necessarily that every process is having a challenge on the fraud. The process challenge may be on the inefficiency side as well. And that's where the process mining comes into picture. Then use of unsupervised learning, where you want to be unbiased in terms of analysis, and that unbiasedness will come only when you put the data in the entire ocean, that now run the entire analysis from one variable to other variable. When you start doing that, it gives anomalies which you might have not even imagined. And the fourth is established fraud detection models like Benford models, hereditary size factor, which we discussed. Like that, there are many other models which are there. Banish model is there, for example. Petrosky model is on the profitability. All these models are established, well-established models. So when we use combination of all these models along with the rule-based logic, we get comprehensive coverage on one set of data, and that's the way it should be looked into. So yes, it follows automatically all the standards, because the one single rule of sample selection is my sample representing the population? And that's how the COSO framework and ICA guideline also talks about. Now, to represent the population, you have tools, you have to apply these tools and models to get those insight that yes, I am now confident that comprehensively scan through the entire data, and I'm getting this chunk which is which is the kind of base for me. Now, from sampling to really identifying the anomalies, there is again a distinction, because when you follow IFC or SOTS, you are from guideline point of view, say that I need 40 samples, 35 samples, 25 samples, so on and so forth. But when you talk about IA and forensics, for you everything is important. I mean, you don't go by samples, you go by exceptions. So it's a combination actually, Akshat. You follow both the methods in a way that at the end I am getting a kind of on my table some line items, not some line items, all line items which has a problem. That's what the way we look into it. Yes, from sampling point of view, you may apply these models, statistical models and these models, but have a combination of randomness as well, because there you can get a kind of insight that I have taken random sample as well, but in a combination of these established models. So in a way, my samples is pretty much spread out, giving me abnormality and giving me randomness as well. I hope this answered to your question.
Yeah, definitely. And looking to the practical scenario, like as you have been also doing forensics in your experience. So, what are the, in your view, like you might have faced many scenarios in your like kind of career. So, what are the major things that you have faced, or one of the major example that people should look after while doing forensic audit, and that is having a high chances of missing if someone doesn't follow appropriate approach while doing the forensic audit. So, if you can highlight on this.
Yeah. So whenever a case comes, or now the today the management, or not only management, it's a duty of risk assurance person, that if I'm doing risk assurance, am I giving an assurance that everything is true and fair in terms of the underlying transactions? To have that, the very first important thing, be it a whistleblower case comes to you, or be a special audit or a routine audit you are doing, the knowledge of business. It is and it has been there as a principal approach, that are you understanding the business or not? So knowledge of business is very, very important, that what areas you are looking into and what can go wrong on that part. That's one set. Second set, since the new age technology, as I mentioned, unbiased, unsupervised learning gives you the entire gambit of it. So second most important thing is the data. And data, just don't think that I want only this data. I mean, this is something what my personal experience has been, that if I go by that I need only these 4 tables or 4 data set, I'm restricting myself. When it comes to a process, I would like to take, and this is what my advice is, go for all the data points, whatever is happening there. You never know which information could be useful for you from that angle, and which could make the entire transaction look different. So this is something which is very, very important, to have comprehensiveness of this thing. Third thing is to understand, is this data, what we see, the data is a kind of generation of the transaction, but behind generation of transaction, is it something backed up by another application or another source which helped them to perform the transaction? Because the planning is the most important thing. Transaction is an execution, but before execution, somebody has thought about it. What are those elements? What are the external source data, strategic data, and all this thing? When you put together everything and you start analyzing, you get to know something is really, really interesting. For example, I'll just tell you one of the investigation which I was doing, and in that case, what was happening, one invoice was getting cancelled time and again. Now, when you see from a preconceived notion that invoice cancelled, I haven't paid anything, what's wrong, right? So it's like invoice cancelled, somebody has recreated the invoice after some point of time. But when I see this trend is keep coming, every time, every day, my invoices are getting cancelled at particular time and regenerated particular time. Now, this is an abnormality, and this is happening only at one place from Pan India. Then starts giving a thought that something is not right. Now, if you follow the predefined set of controls or predefined process, you may not notice it. But when you just keep it unbiased and see that why out of 100,000 invoices for this user, this location, 80% time invoice get cancelled and regenerated particular point of time. My initial invoices are getting generated whole day, but at 5 p.m. all invoice got cancelled and regenerated. But when we investigated it, we realized that it was fake discount, I mean, the discount which should have been passed on to the customer was not passed on to customer, and that's the reason why invoices were reversed. The material which was given to the customer taken by the employee and sold in a separate market. So, in essence, you have to leave everything open in terms of analysis. You cannot bound yourself. So that's an important thing you have to understand. So I mean, these two are the important parameters when we do the fraud investigation or risk assurance, that don't be biased, that this wouldn't be possible, or this would have been the situation, or this would have been the process, approval might have been taken, this is okay transaction. No transaction, you should not leave that. If anything happened, why it had happened, you have to understand that. And if it is happening more quite frequently, then it becomes definitely a case of suspicious.
Yeah, definitely. It's actually kind of making sure that we don't just follow the traditional way of doing the things, but whenever required, and looking to the uh, means like whatever company we are doing audit, like we should look into the industry, we should look at the business, at the approach that they have followed for doing the business, and accordingly we should design our procedures so that we can finally reach a conclusion.
Right.
Yeah. Also,
Sure.
as in the today's world, like look at the regulatory requirements, we have to report on internal controls as well for the companies. Like as a part of statutory audit, if I talk about, like we are doing reporting on internal financial controls or financial reporting, and for that the companies are also implementing internal audit within the corporates. And so, how can we link the internal control testing or the reporting on these internal controls with the forensics, and how can we like look after it?
Good question. So I think the recommendations is always that when we have risk and control metrics, the transactional risk should be covered with anti-fraud controls. So the controls what we defined in our system or in our risk and control metrics, we should also have comprehensive coverage that is it a fraud risk? If yes, what is the likelihood? What is the probability? And against this fraud risk, what is the control which we have defined, be it preventive or detective, which can combat the fraud? So that way, when we do IFC or SOX, because certain companies which are listed in US also having operations in India, they have to follow both SOX and IFC now, and also ensure that the risk assurance. Then in that situation, it is very important that how methodologically the risk and control environment or risk and control framework is designed, where these elements are also captured into it. So that helps in leveraging the assessment what we are doing, because when we are doing the walkthrough, when we are doing the process walkthrough as a part of IFC assessment, we understand the fraud controls as well, we understand the fraud risk as well, and accordingly, those same set of data, same underlying data can be used from that angle as well.
Yeah, yeah, sure. And as you have been talking, we have been discussing about the forensics audit and things, how the auditor needs to look after different kind of things in the audit. Like as we can see, like at the first question we discussed regarding the AI tools which the companies have been using, and and if we link it the same with the internal control reporting, so the company, so we are also required to look after the IT general controls.
Yeah.
Or IT automated controls. Like there are so many different kind of controls which the company need to implement within the processes to make sure that the processes are being followed smoothly, and there is no way of kind of misstatement in the processes. So how can we kind of take advantage of different softwares being used by the company, and in a forensics audit, or instead of just using our applications or implementing our process softwares over there, how can we take advantage of those companies kind of infrastructure, IT infrastructure?
So your question is that if companies are using multiple application, bots, RPAs, everything, and on top of it, we are using forensic model, how are we ensuring that the general controls are in place, right?
Yeah, Mike, that's
Yeah. So I think for general controls as well, you use forensic thing, and that's what is happening, because The idea of IDGC assessment is that to understand the change management, the governance board, the control board, how things are happening, how the codes are being changed. Now today, every change is getting logged. And when you start looking at the log report, you understand the implications of it. So there are softwares available which performs the scanning on the changes done on the code, the review of the log tables, etc., which gives you comprehensive coverage that from the general controls point of view that these logs or these changes configuration changed abruptly or is it has it followed the process, because on those also you can apply the model. So since these models are open source models, you can use it for any use case. You may want to use for the business processes, you can use it for application control, you can use it for general control. For example, give you the example of application control from SOX IFC standpoint of view, or even for IA point of view. We say that point of time testing, and on a particular date I say my control is effective. What happened in the entire year? I might have done the configuration changes 10 times and reinstated, and those 10 times the business transaction happened. Since understand, Akshat, that whatever you do, the ultimate benefit passed on in commercial terms. Is it either is a false payout or not having payout from the customer? This is the precise risk comes up, right? You lose dollar value. Now, whatever do I on the back end, I do changes in the applications or the environment or the security structure architecture, the having impact on that part. And that's where when we in today's environment run through the continuous control monitoring or use of technology, it scans through every transaction. And this is our responsibility. When we build up the system, are we covering all those components at one place or not? Because the more the data point is structured there, you get to know all those analysis minutely, and there you get to know if something happened, some changes done by somebody, and immediately a transaction happened which resulted a benefit to a vendor, and again the configuration is reinstated, it's a clear sign that these two people are doing something nasty. So that's how you give assurance around control. So in essence, the entire analytical has to be built up on all the processes. Then only you get to know the connected dots about it. If you go only half-hearted with one process, you may not be able to know what's going on the other side of the table.
Okay. Yeah, that's great. So just one last thing, so means like as a part of forensics, like companies, we definitely we do forensic audit of different companies in industry. But what are the some regulatory requirements that that kind of professionals need to follow from forensics point of view, like apart from following different standards and all, but from reporting point of view or from other regulatory compliances, like are there any specific regulatory requirements which everyone, each and every professional whoever is working or interested in working in the forensic area needs to take care?
Yeah, I think complete forensic has a cycle or a stages. When it comes to analysis of data and all those things, yes, GDPR, data privacy has to be taken care into account. It's internationally and nationally as well. Requirement of Companies Act has to be taken care. Is very important. Requirement of other regulatory framework, local law, country law has to be followed, because you cannot just start doing investigation. Breaching the entire these protocols. You have to remain in your protocol to do that, or take right permissions around it. But yes, from business data analytical point of view, you are pretty much covered, because business transactions owned by company has followed or has taken a code of conduct sign off from employee, from vendors, suppliers, customers, and accordingly we are having a right to perform extensive review on those transactions on those machines. But yes, when it comes to data which is external or having some privacy about employee or even from the supplier or business partner point of view, of course we need to ensure the data privacy part of the important element which need to be taken care. But yes, there are defined guidelines as issued by ACFE as well, ICAI as well. So this we have to take into account.
Okay. So I think Kapil, that was great session from our end, and definitely we got to know much more regarding the analytics which can be used in forensics and different audit procedures while like performing the same. So
Sure.
thanks for your time.
Thank you.
Yeah.
Sure. Thank you.
Thanks. Now, before moving to the next session, I'd like to introduce CA Mridul Mehta. So, Mridul Mehta is a chartered accountant, professor, and examiner with the Cambridge University and Cambridge Assessment International Education. He is the author of acclaimed AS and A level accounting textbooks and has extensive teaching experience across the Cambridge curriculum. He is associated with ICAI as a member of the Expert Advisory Committee and is widely recognized for his strong command over accounting, taxation, financial reporting, and quality management standards. He is also known for his structured and student centric teaching style, and he is currently working and developing a digital learning platform to enhance access to high quality commerce education. Now, I'd like to invite Mridul to take over and give us a session on in this one. Yeah, Mridul. Okay, I think there's some technical issue. Uh, let let us just check this. Okay. In the meanwhile, I think okay. Let us just check the there's some technical issue. Let us just check at the backend and I check.
It seems there is some technical issue. Just give us 2 minutes.
Sure, sure. Hello, yeah.
There is some technical issue. We'll be working on it. Give us 5 minutes.
Yeah, no problem. Hello.
Okay, we have concluded one first session.
Yeah, Satish, we have concluded on the first session.
Now going for second.
Yeah, right.
Okay. Where Mridul? Mridul, how are you?
Sir, there is some technical issue from his side actually.
And Mridul is not able to speak.
Yes, there is some technical issue, so we are working on it.
You work, let me complete then in 2 minutes what I want to say.
Yes, sir, you can continue, sir.
So the members are listening me, na?
Yes, sir.
Okay, thank you. So, where is Madam Ginni Madam? Okay. Ginni Madam, are you not here? My dear brother Mridul Mehta ji from Jodhpur, to whom I feel that he is a wonderful orator, having a very big knowledge about the All India ASH. Akshat Jain ji, moderator of the today's session. Ginni Goyal ji, secretary of the committee, working very hard. Tech team and my dear friends. I think the first session could have gone very well because the topic was very nice, and the second is going to be wonderful because Mridul is expert of the NDS, and after his deliberations, there will be certain value additions to your knowledge. Definitely. Friends, Continuous Professional Education Committee is working hard to ensure the quality and availability of the CP programs to the member who is residing in the remotest corner of the country. To ensure this particular endeavor of the CP, we are working to open as many as new CP chapters, CP groups, and we are also working to ensure the quality of the CP programs. And it is perhaps it is our 65th, madam, 65th?
66th.
66th.
Yes, sir.
66th CP webinar this year. And these are not simply webinars. I think all are the mines of knowledge where we are putting some knowledge on various topics, various subjects. Even we are inviting the experts of foreign countries who are talking about the opportunities in their own countries. We are inviting the industry experts who are talking about the opportunity in their specific industries. And we are also inviting MSME experts to share their views on the opportunities in the profession in MSME sector. So we are working a lot through this medium. We are also arranging several national conferences, several seminars, several residential refresher courses this year. And if we calculate the entire CPA credit, it will be in the, I think, crores of the hours. So this is the achievement of the CPA committee. And to ensure the quality, we are working to bring real-time CPA credit system. Meaning thereby that if a member attends a program, register for a program of 12 hours, but attend only for 6 hours, then member will get the credit only for 6 hours. So we are working with the latest technology that how we can implement this particular thing, and our members can be benefited by this particular initiation of the CPE committee or the ICI. Friends, one more thing which I would like to make a request here, that in 2026, on 30th January, 31st January, 1st February, ICI is going to organize a very big international conference naming WOFA, World Forum of Accountants. And in this particular World Forum of Accountants, the representative of the entire world are coming. Speakers of the entire world are coming. And this is a platform where we can get networking benefits, we can get several other benefits. So this is an opportunity which we all should take. There are some other features of this particular WOFA which you can know by going to the WOFA page of the ICI portal, and you will find there that there is a lot of things which you can get there by attending that particular WOFA. Apart from this, we are also arranging several other national conferences. So you must be aware by visiting the CP portal. You may be aware that what are the programs are being conducted by the CP committee. So you can register and can attend. Few things I would like to share about the challenges in the profession, which needs united efforts. I have read in a paper that government is thinking to plan some modifications in the provisions of the tax audit and the company's audit in want of ease of doing of business. So this is a big thing which is coming to our profession, and we must be aware at all times what is new and how we can cope up with these challenges. We can cope up by having value additions on newer subjects, newer topics, newer very areas, emerging opportunities. And apart from this, we can have an effort to meet with the leadership of our country through the various associations, various unions, that how the things are necessary in the field of audit. So these are the some things which I wanted to talk with you, that this is the time when we should be very cautious in attending CP programs, very cautious in making our firms bigger firms, or aggregation of firms, or merger of firms, or networking of firms. It is very much needed, and we should throw our light on the advisory or consultancy firms. How we can make our firms bigger, you can know by visiting the CP portal. If you just pose your query on CP portal, we can arrange a meeting for you all to give you a knowledge about what is in aggregation, what is in merger, and how it is done, and how it is beneficial for our profession. So just put a query on the CP mail. We would definitely take whatever subject you want to have. Apart from this, if you want to speak on this platform of CP, you please show your interest by visiting again cpa@ICI.in. They will definitely contact you, because I know under the dynamic leadership of Ginni ji, the CPA committee is working a great job this year, and we are trying to have as much as conversations and solving the problems of members. So this is something, friends, which I thought that there were technical issue with the Mridul. So I thought I should come in between you and Mridul. Nothing much. So thank you very much for attending this webinar. Thank you very much for giving your feedback. Thank you very much for giving your suggestions. And we are waiting your suggestion and feedback regularly. Thanks a lot. Thank you very much. Akshat, problem is solved?
Sorry?
Problem is solved of the Mridul?
No, I think he's still facing some issue, technical issue.
So what is the alternate then?
Let me just check with the.
You talk to Mradul that he can go to another system. Joining, okay. So over to Akshat for the further proceeding. Thanks a lot. Thank you very much.
Thank you, Sateshji, for your guidance. Yeah. So Madhur will be joining in few minutes. Then we can start with the second session on Index 115. So let us just wait for 3-4 minutes. Then Madhur will begin the session.
Hello.
Hello.
Am I audible now?
Yeah.
Yes, you are audible.
Oh, thank God,
Welcome back.
thank God. Thank you to the technical team. Okay, Ji.
Okay, that's great, Madhur. So now we can finally move to the second session, and
Yes.
happy to have you here. Yeah, let's go. Handing
Thank
over.
you so much, Akshaji. Although we are half an hour late, but so I have to rush it. Thank you so much to the my alma mater Institute of Chartered Accountants of India, Akshaji. Thank you so much, all the technical support team and CS Satishji Gupta. Thank you for your always giving me this wonderful opportunity to come back to my mother body. So, without now wasting much time, just let us begin with our core topic, Ind AS 115. I'm sharing my screen here. Please let me know whether is it visible or not. Is the screen is visible?
Yeah, it's visible.
Right. So, Ind AS 115 begin with the core standard for recognition of revenue. As a traditional practice, we always know that revenue means what, which is what we earn, what we realized. Revenue क्या होता है जो हम earn करते हैं. Mainly in Accounting Standard 9 and Accounting Standard 7, all the accounting standards related to revenue emphasize on one thing. That thing is transferring of risk and reward. And according to after transferring the risk and reward, it is the seller's duty to record the revenue. So he has to identify two things only: whether risk is transferred and whether a principle, or as per principle of realization, whether it is now probable of certainty of realization or not. That's it. But when we are coming to Ind AS 115, all over Indian accounting standards, they emphasize on transfer of control rather than transferring of risk and reward. Ind AS 115
includes all the revenue that arises from the contract with the customers or the clients to whom we are providing our services or to whom we are selling the goods. However, it does not include Ind AS 17, that is exclusively for lease contract, Ind AS 104, that is exclusively for insurance contracts, Ind AS 109, 110, that is outside the scope of Ind AS 115 because a specific Ind AS for financial instrument and contractual right and obligations are covered under that. And all those contracts where there is a barter, means there is a non-monetary exchange. For example, if I buy a shirt and in place of shirt, if someone is giving me shares. However, this covered under Ind AS 115, but it includes only those considerations that are mostly a consideration other than cash. Now, when we are talking about Ind AS 115, it basically emphasis on five-step model to recognize the revenue based on transfer of control rather than transfer of risk and rewards. There are 5 main steps that recognize the revenue under Ind AS 115. And then 5 steps are: identify the contract with customer. There must be a contract. There must be an arrangement with the customer. Step number 2, identify the performance obligation. क्या होता है performance obligation? All the promises which we did at the time of providing services or goods. So performance obligation are mainly the promises which we deliver as a seller, which we have to deliver to the clients or to the customers. Now, the performance obligation can be one obligation or it can be a multiple obligation included in one services or goods which we are selling. Then, after identifying the performance obligation, the third step is to determine the transaction price. Transaction price can be a composite price which cannot be segregated, and transaction price can be individually separated. राइट एक सिंपल सा एग्जांपल अगर ले लें तो एक मील है, अगर we have a food of meal, we have that thali of meal that includes chapati, rice, vegetables, curd. So this is all the performances obligation that can be separately identified, but when we are serving as a meal, it is a single performance obligation. So in this Ind AS, the core emphasize on identification of performance obligations. And on the basis of performance obligation, our step is to identify the transaction price. Whether we should recognize revenue as a whole, or we can recognize revenue on the basis of terms of condition that need to be ascertained on the principle of matching. How we will understand, how to find out transaction price based on performance obligation, we have certain scenarios that I covered in this PPT. After identifying the transaction price, of course, on the basis of performance obligations, we have to allocate our transaction price. And then the last step, recognizing the revenue as per principle of realization and principle of matching. There are 3 breakdowns for Ind AS 115. First is revenue, second is contract, and third is most important, the customer. What is revenue? Sale of goods or provision of services in ordinary course of business. Contract is an arrangement or an agreement between 2 or more parties which create an enforceable right and obligation. Customer means a party that has contracted within an entity to obtain goods or services that are an output of the entity's ordinary activities in exchange for the consideration. Now, identify how to identify the contract with customer. कैसे पता चलेगा कि ये contract हुआ है या नहीं हुआ है? How to identify? So there are certainly 5 basic elements to identify the contract with customer. So this is condition number 1. All parties must approve the contract and should be committed. Second condition can identify each party's right regarding goods and services to be transferred. Condition number 3, we must identify the payment terms. It can be a lump sum payment or it can be a deferred payment system. Must have a commercial substance. Mere transferring of goods and services does not include into the definition of commercial substance. And the fifth part, probable, that entity will collect substantially all the consideration, that is, it must satisfy the principle of realization. Now, identifying performance obligation. क्या क्या हमने वादे किए हैं? So it is promises to deliver. In cases where multiple goods or services, which we can call as a bundled services. In case where multiple goods and services are promised in a single contract, entity shall identify they are more than whether it is a single performance obligation or multiple performance obligation. For example, if we promise in a single contract to provide software services and installation and a 3-year maintenance technical support, so we have 3 performance obligations. First is the software, the tool itself. Second performance obligation is the installation, the second services, and the 3 years maintenance technical support system. So there are 3 promises that we included in one contract. So contract is one, but obligations are 3. So here is the crux of Ind AS 115. अगर एक ही कॉन्ट्रैक्ट में 3 अलग अलग वादे किए गए हैं, in a single contract, if there are 3 or more, if there are more than 1 obligations to be satisfied, so it is the duty to identify this performance obligation, and according to that performance obligation, whatever price we are charging, we have to allocate that price. That price is called as transaction price. उस transaction price को हमको हर performance obligation से अलग अलग identify करके उनको allocate करना है. Coming to what is performance obligation and how it is distinct. So if goods and services are distinctly identifiable in a single contract, then it is multiple performance obligation. Like if we are going in a flight, we purchase a ticket, but if food is also included, so it is a single contract with multiple performance obligation. And second, if goods or services are not distinctly identifiable in single contract, then it is a single performance obligation. हम amusement park में जाते हैं. So we have a lot of things to enjoy. There are dramas going on. We have to go to roller coaster. But the price is single. We cannot identify it separately. So even there are multiple performances obligation, but contract, it is a single performance obligation. So if we can identify it separately, we have to allocate transaction price according to performance obligation. If contract is not identifiable separately, then whatever price we are charging is to be allocated to that single service only. Goods or services are distinctly identifiable if 2 criteria are met. Goods or services are capable of distinct if customer can benefit from individual goods or services on its own. अगर हर performance obligation individually हम उसका benefit ले पा रहे हैं, then it is a capable of being distinct. Together with other readily available resource can sold separately. Example, obtain internet services along with OTT subscription. So there are 2 performance obligation and that can be identified individually. So these goods or services are capable of being distinct. And second, the condition is and, not or, and separately identifiable from other promises in the contract which include significant integration services are not provided. One goods or services not significantly modify or customize other goods and services, and goods or services are not highly interdependent or interrelated. What is the crux? The crux is the services cannot be called as a separately identifiable if says there are 2 services, X service and Y service. If X services is mandatorily to be provided to provide Y service, then we cannot say it is a separately identifiable. But if X services can be provided individually and Y services can be provided individually, then we can call it as a separately identifiable service. तो ये 3 important point है जो हमको ध्यान रखने होंगे हर contract में. If it is a significant integration services not provided, if one goods or services not significantly modify or customize other goods or services, or goods or services are not highly interdependent or interrelated. If I buy a laptop, can I say the Windows software, the operating system cannot be detached, right? So if it cannot be detached, if one services are highly interdependent, then we cannot bifurcate into a separately identifiable service. Significant integration services means what? As per Ind AS 115, revenue from contract with customer, a significant integration services occur if the entity combines various elements into a single comprehensive solution and making them inseparable. अगर एक ही सर्विसेज या एक ही गुड्स में अगर मैं मल्टीपल परफॉर्मेंस ऑब्लिगेशन को इनकलकेट कर देता हूं और उन सारी सर्विसेज को एक साथ जोड़ के देखना पड़े, मींस हर सर्विसेज को मैं इंडिविजुअली ना देख पाऊं, तो वो होता है सिग्निफिकेंट इंटीग्रेशन सर्विसेज. जैसे मैंने एक एग्जांपल लिया है, आई टुक वन स्मॉल एग्जांपल फॉर दिस. से कंपनी एंटर इनटू अ कॉन्ट्रैक्ट टू डिलीवर अ कंप्लीट वाटर प्यूरिफिकेशन सिस्टम. Now, there are 5 performance obligations if you closely observe. First is engineering and design services, planning the system layout and specification. Second, procurement of pumps and equipment, sourcing key components for the plant. Third, physical construction site, building the plant infrastructure. Third, testing the water quality. And fifth is integration of all component. इसको हम ऐसे भी समझते हैं, एक बड़ा मकान बनाना है हमको, उसमें लेबर भी चाहिए, पत्थर भी चाहिए, पाइप भी चाहिए. So these all are highly interdependent, and in order to make it operational, we need to deliver in a single performance, in a single contract. So since it is a multiple performance obligation, but since the project is single, the contract is single, even though we have multiple performance obligation, however, that performance obligation cannot be dealt separately. So this is called as significant integration services. One goods or service significantly modify, customize other goods or services. एक goods या services दूसरी services को प्रभावित करती है, influence करती है, modify कर सकती है. So as per Ind AS 115, when one goods or service significantly modify or customize another, they are treated as single performance obligation because they are highly interdependent. A simple example of this, a customized enterprise resource planning system, ERP system. A company contract to deliver ERP software that includes first, software development and customizing, that is tailoring according to the needs of client. Integration with existing system, ensuring compatibility with the client's infrastructure. And third, they are providing the training program also. So deploying and educating employee on uses. So since the software is significantly modified to meet a specific requirement and cannot function independently, all services are treated as one performance obligation. अगर हम जुदा नहीं कर पा रहे हैं हर सर्विसेज को दूसरी सर्विसेज से, if we cannot able to segregate different performance obligation, in crux it is called as one performance obligation. So the last part is transaction price. मूल्य को कैसे आके, how to determine the transaction price. So there are certain parameters, the components to identify the transaction price. So fixed consideration, that is stated price in the contract. Second is variable consideration that depends, like discount, rebate, incentive, penalties. If you remember, Aksharji, we have that accounting standard 7. We have a contract price. And there are penalty clauses also, incentive clauses also. So these all are variable consideration subject to future happenings. Then we have third significant financial component. In the financial management project reporting, we have capital budgeting as a chapter where we says cash inflows in the future that has to be discounted back to the present value. You see, accounting is going far away. It is not now, we cannot say as a traditional methodology. We have to comply with the time value of money component where we have to, if there is a future benefits that accrue today, we have to discount it back. And that present value, whatever the present value that we get is the price. And what about that discounted value? That is to be considered as finance cost. So in my statement of profit and loss, my revenue is the present value, whereas my finance cost is the part of my expense, non-operating expense. Fourth is non-cash consideration, payment made in non-monetary form. Example, in mergers and acquisition, we have shares, goods and services to be exchanged. And last is consideration payable to a customer, discount, vouchers or payment reducing the net transaction price. Now, let us understand the revenue recognition based on 5-step model for different industries based on practical scenarios. We have a limitation of time, so I'm going quickly for each scenarios. Scenario 1, let us say an example of telecom industry. ABC Limited, a telecom company, offers a bundle plan. एक स्मार्टफोन दिया वर्थ ₹30,000 और उसमें मुझे 12 months का प्रीपेड मोबाइल प्लान दिया जिसका वर्थ है 12,000. So a smartphone worth ₹30,000, a 12-month prepaid mobile plan worth ₹12,000. So if you total it up, there are two performance obligations. One is the device and second is the prepaid mobile plan. So if you acquire individually, smartphone cost me 30,000 and prepaid cost me 12,000, 42,000 is the total price. But when they are giving as a bundled services, they are charging me 36,000. So the question is, the step number 1, is it the contract? The customer signs a 12 months contract with ABC Limited. So it is a contract. Obviously, it is an implied contract. Now there are two performance obligations. दो वादे किए हैं. First, smartphone delivered immediately. और second, telephone services provide over 12 months. हर महीने का इंटरनेट का खर्चा. Now, the transaction price is 36,000. The fourth step is wonderful step. Allocate the transaction price. अब इस 36,000 रुपए को हमको कैसे allocate करना है? So stand alone price अगर हम देखें, individually if we can call this price, if we can see the prices, the stand alone selling price of the phone is 30,000 and the mobile plan is 12,000. So stand alone value is 42,000. Since we are getting only 36,000, so phone we have to charge proportionately. 30,000 on 36,000. So how much 30,000 on 42,000. So how much it would cost to 36,000. So my phone will be proportionately allocated as 25,714. And telecom services, again proportionately, 36,000 divided by 42,000 into 12,000. So 10,286. So this is the beauty of this NDS. It is not 36,000, and we cannot say 30,000 is for mobile and 6,000 is for internet, that telecom services. So we have to proportionately allocate the transaction price. Now comes the last step, how to recognize the revenue. Obviously, we have to apply matching principle. Phone is delivered now. So if phone is delivered now, can I say 25,714 is recognized immediately when the phone is delivered, whereas 10,286 is recognized over 12 months period. So 857 per month. So every month we have to transfer our revenue 857 over the 12 months period. Key takeaways: revenue is split based on the fair value of separate obligation, not actual price, fair value. Unlike old method where revenue was recognized as for invoice amount, 30,000 charged, 30,000 is to be recorded as sales. No. Sorry. Ind AS 115 ensures proper revenue allocation. Help in transparent financial reporting by showing accurate revenue from different obligations. So my revenue, my sales is only 25,000 something. And the balance internet charges I have to allocate over the useful life, not as a revenue, but as other income. So as per old methodology, 30,000 was charged as an invoice, charged as a revenue. But in new Ind AS 115, first proportionate amount, and second, you have to identify the performance obligations. You cannot say revenue only. It's revenue plus other income. Scenario 2, let us take an example of real estate industry. Say XYZ developer is constructing an apartment complex and sales unit before completion. बनने से पहले ही वादा कर दिया गया है बेचने का. Price of each unit is 50 lakh. Agreement signed was on January 2025 in the beginning of the year, but possession is to be given on December 2026. Payment is scheduled as 25% upfront on booking, whereas 80% 40 lakh in installment during construction period. And construction progressive is evenly spread over 2 years. So how to identify so first of all, it is a contract or not. Obviously, customer signs an agreement to buy the apartment. Identify performance obligation, deliver a fully construction apartment. So there is no separate performance obligation. It is a single performance obligation. What is the transaction price? 50 lakh per unit. How to allocate transaction price? Since it is a single obligation, delivery, no need for allocation. अगर एक ही obligation एक ही वादा है तो अलग अलग allocate करने की जरूरत नहीं है. How to recognize revenue? As per Ind AS 115, revenue is recognized over time if the buyer control the assets as it built, that is, he has a right of customization. B, the developer cannot sell it to another buyer once the contract is signed. So can I say control? Risk and reward not transferred, but control transferred. ये important point है इंडिया से. अभी तक risk and reward transfer नहीं हुआ है. वो तो transfer होगा जब possession जाएगा. When possession is transferred, then risk transferred. But Ind AS 115 says if control transfer, then revenue can be recognized. Point number 2, if these conditions are met, revenue is recognized based on construction progress. So if it is completed, so 2 years allocation, so if 50% is completed by December 2025, the XYZ developer has a right to recognize 50% of the revenue. If so, basically percentage of completion basis. And remaining 50% by December 2026, 25 lakhs is to be recognized. Now, if that control does not transfer, अगर ये control transfer नहीं हुआ होता, तो that revenue cannot be allocated over the period of 2 years. Then this control, once this control has not been transferred, say if control is transferred after possession has been given, in that case, complete 50 lakh is to be recognized in the year when the possession is transferred. So this is a, things that to be dealt very carefully. What are the takeaways? Under Ind AS 115, real estate firms must assess whether revenue is recognized over a time or a point of time. Old method, accounting standard 7 or 9, allows revenue recognized based on receipt or basically percentage of completion, whereas Ind AS 115 focus only on control. It improves transparency in the financial statement, ensuring revenue is not overstated before work is completed, as per the principle of prudence. Let us take third scenario, software industry. ABC Limited says sales enterprise software with 1-year license and customization services. Contract is signed on April 1, 2025. Says software license is a pre-package for 5 lakh and customization services 2 lakh and annual maintenance support is 1 lakh. So if you see, there are 3 performance obligations. Software license 5 lakh, customization service 2 lakh and annual maintenance support 1 lakh. If you total it up, 5 plus 2, 7 plus 1, 8 lakh. But total contract price is only 7 lakh and customization is to be completed in 2 months. So obviously there is a contract, but there are 3 performance obligations identified. First, transferring of software license, that is right to use pre-packaged software. Second, customization services, tailoring the software according to the need of client. And the third, annual maintenance support, technical assistance for 1 year. So there are 3 performance obligations, but transaction price is 7 lakh. Since this, all the 3 services can be identified individually, so we have to identify and we have to allocate the transaction price into different performance obligation. So based on standalone selling price, software license is to be allocated proportionately. Out of 7 lakh, 4.375 lakh is for software license. That revenue can be recognized immediately. Customization services of 1.7 lakh, it should be recognized over 2 months because 2 customization services require 2 months. And last, annual support service. So annual support service means what? For the 12 months period. So since it has been allocated 0.875 lakh, it is to be recognized monthly over 12 months period. This is Ind AS 115. First, identify the transaction price, then allocate the transaction price, and then recognize the revenue as per principle of matching. Key takeaways from this example: different components of contract are recognized separately based on performance obligation. License revenue is recognized at a point of time on delivery. Customize is recognized over the time it takes to complete. Annual support is recognized evenly over the contract term. Old standard accounting standard 9 would have allowed recognized revenue upfront, but Ind AS 115 ensures proper allocation. Subscription services, one of the example, like we have XYZ Streaming Limited offers 1 year OTT subscription with a discounted smart TV bundle. Say there is a smart TV, if bundled with OTT subscription, it is 24,000 market price. Bundled price is 25,000 if you are taking TV plus 1 year subscription. Subscription starts immediately, TV is delivered upfront. So if you see, contract is there. There are two performance obligation here. First, delivery of a smart TV and 1 year OTT subscription. Now, if you see, transaction price is 25,000. So again, TV is to be cost 24 upon 30 into 25, that is allocated proportionately. 20,000 is charged to TV, whereas subscription 5,000. So since TV is a revenue, selling of smart TV is a revenue, it should be recognized immediately as revenue from that is revenue from operations. Whereas subscription revenue recognized monthly over 12 months, 416.67 per month. But the beauty of this standard is revenue from operation is 20,000, whereas other income is 5,000. In total, 5,000. You cannot call 25,000 as revenue from operation. Revenue from operation is only 20,000. Revenue is split based on fair value allocation, not just invoice price. Revenue from TV is recognized upfront, while subscription revenue is spread over time. This prevents companies from inflating revenue upfront by recognized bundle payment incorrectly, unlike old standards that would have recognized 25,000 on TV delivery only, misrepresenting subscription revenue. So 25,000 is not revenue, only 20,000 is revenue, 5,000 is your other income. Let us take last example, as we have limitation of time. So sorry for this interruption in between. So I'm taking this last. Room booking services, like we have a complimentary breakfast and spa services. So how to deal it with it? Say a luxury hotel offers a 3-night package that includes a room stay for 15,000 per night. Complimentary treatment of spa standalone price is 6,000. Breakfast is also included, and say 3,000 for 3 days, 3,000 for 3 days, and total package price is 42,000 paid at the time of booking. So this is a simple case scenario. Now, how to allocate? Contract is identified, customer books and pay a 3-night stay package. Identify performance obligation. There are 3 performance obligations. First, room accommodation, provide over 3 nights. Spa treatment, it's a one-time services. And breakfast provided daily. Now, transaction price 42,000. So can I say it should be allocated proportionately? Right. So 35,000 for room, spa for 4,667, and breakfast for 2,333 for 3 days. So how to recognize revenue? Room stay is recognized 11,667 per night. Spa treatment, since it is a one time, so it is recognized on the day when services has been taken. And breakfast is to be evenly distributed over the 3 periods. That is 2,333 for 3 days, so 777 per day. So this is all about Ind AS 115. Sorry, I am just curtailing down here. I have to take transaction price in detail, but it will take another half an hour. So I am thankful to you guys. This is it from my side.
Okay. Sure. Hi, Mridul. That was great, actually. Going through the 5-step model of revenue recognition. Like,
Right.
as you said, Ind AS 115 has definitely changed the way of recognition of revenue. Earlier, we used to have AS 9 and AS 7 for different kind of contracts. But now we are all relying on Ind AS 115 just to get a contract on this 5-step model and just see if the revenue can be recognized or not. So, like, we do have some questions if we
Yes.
can go through. So as you gave an example in real estate model, like how to recognize revenue when you're selling a flat or something which is still under construction. So, in a practical scenario, like how will we decide whether the control, whether we are passing the control over the period of time or at a point in time? Like, if you can give an example from practical experience, that how can we look on these things?
A great question, Akshat. Practically, if I tell you, still various developer that all the infrastructure companies are following AS7 only, Accounting Standard 7. So they are recognized revenue as per percentage of completion method. Still, it is very subjective option. When we are looking at the practical life scenario, they cannot decide it. And even individually, if you say there are 10 flats in an apartment, they can have a separate contract with me. They can have a separate contract with you. So individually, implementation of this Ind AS, whether the control has been transferred or not, it a point of discussion with them. So you need to meet with them personally to understand whether you transfer the control or not. If control has been transferred, because by looking at the contract, you cannot decide. Absolutely, you cannot tell whether the contract control has been transferred or not. They will definitely tell you one thing that no, sir, no contract control has been transferred. The control will be transferred once we deliver the flat,
Yeah.
even though they have a right. So you have to read the agreement, whether they have a right to modify, whether they have right, or second, the most important thing, once contract has been signed, they cannot breach the contract, they cannot recon the contract. Right? So control means simple, Akshay. If control transferred means what, you have a right. Say if I am a developer and if I say, Akshay, this is the flat, and you have right how to modify it, and I cannot sell it to you once I take upfront payment from you. अगर मैंने वो 10 लाख रुपए ले लिया आपसे, तो 40 लाख भले ही 2 साल बाद आएगा, बट कंट्रोल ट्रांसफर हो गया, क्योंकि आपको मैंने दो चीज ट्रांसफर कर दी है. फर्स्ट, राइट टू मॉडिफाई अकॉर्डिंग टू योर रिक्वायरमेंट. सेकंड, I cannot sell to anyone.
Right.
So if this condition satisfied practically, then you say, sir, you have to recognize revenue on matching principle. Otherwise, if control has not been transferred, then of course, at the time of possession, at the time of delivery of apartment, in that year, the revenue should be recognized. So very subjective question, actually.
Yeah, actually, like I've also seen so many examples practically. People are actually following POCM as per E7 and they're not jumping on the Ind AS 115 principles.
This is actually now it's our role
Yeah, right.
to pitch the companies to follow Ind AS 115. In my practical experience, I have one client, not more than one, actually one client only. So they are into the construction where I got the project reports every year. So when Ind AS 115 came, so I always ask them whether control transferred or not. Say, sir, no transfer of control. जब आपको चाबी देंगे उस दिन ये प्रॉपर्टी आपका हुआ. So even in practical implication, we are following Accounting Standard 7 for recognition of revenue.
Also, like as a part of 115 steps, there is one very important step of determining the transaction price. And while doing the same, we do have variable consideration, which still confuses people a lot. Like, what are the different type of variable considerations available, and how to kind of consider them while determining the transaction price. So, can you just give some examples over variable considerations?
A basic variable consideration example we have with us is the incentive clause and penalty clauses that practically we saw. That is subjective. मैं आपको एक simple example देता हूँ. There is one apartment at our area that says if you refer one client, one more customer to us, we will give you upfront discount of 10% of the whatever price we are charging. So now this recognition that discount is subject if I refer one client to them. तो बोले मृदुल सर 2 साल के पीरियड में अगर कभी भी आपने हमको एक कस्टमर और लाके दे दिया, तो आपका जो भी ट्रांजैक्शन प्राइस है, जो 1 करोड़ का एक फ्लैट है, तो हम आपसे 95 लाख ही चार्ज करेंगे. तो ये 5 लाख जो है वो बड़ा वेरिएबल है. So this variable clause should not be determined at the beginning of the phase. It should always be defined at the later on phase. तो प्रैक्टिकली अगर मैं आपको बोलूं तो एलोकेशन ऑफ रेवेन्यू कैसे होगा. से 50 lakh is the cost, right? And they told me you will get a 5% that 5 lakh of discount if you refer me. At the end of second year, if I refer them, one more client to them to buy the apartment, so technically 25 लाख रुपए उन्होंने already recognize कर दिया है.
Yeah.
At the second year, जब वो 25 lakh recognize करेंगे, so that loss of discount that accrue to them, they should recognize in the year when that condition satisfied. So
Right.
variability itself is variable, not fixed, right? And whenever that variable clause comes, it is exactly like accounting standard 7. If you remember that first year, if there is no penalty clause or there is no incentive, we recognize according to the price which set. In the second year, if there is a penalty or incentive, we add or deduct in that year only. So all the modification of variable component should be gone into the year in which that variable component accrued. So this is practical scenario for variable considerations.
Yeah, right. Because variable considerations becomes contingent many a times, and then we have to look whether that will become certain or not, and accordingly, it has to be listed in the books.
It is exactly like ESOP,
Yeah.
right? How many number of employees will be there at the end of 1 year or 2 year or 3 year? So it is like ESOP only,
Yeah.
right? Same. So this is variability, and variability is actually the estimation, right? So if estimate change, the revenue recognition change according to change in estimations.
Sure. Yeah, and definitely estimate is itself a very big area, like where
It's a
management.
very big area. So
Yeah, definitely. So I think that's all we wanted to discuss today, and it was great having you over here and going through the 5-step model of revenue recognition and what are the differences that we have in this effect. Okay, well, thanks.
thank you so much, Akshay. It was a wonderful time. Thank you to the technical support team for reboot my laptop. Thank you to the CP committee, the president Satish Gupta. I thought he joined, but due to technical glitch, we have not got the time to meet him. So thank you so much, everyone. Bye bye.
Thanks everyone. So that's all from our end. The 2 sessions in this webinar. We will definitely get in touch in another webinar on other topics. Thank you. Thank you everyone.
Thank you.
Have a great day.